Are you considering getting some financing for your business? If so, this video should make it a lot easier. If you've started the process, you realize that business funding is a lot more complicated than consumer lending, say if you've gotten a mortgage or an auto loan before. So we're going to take some time with this video to break down all the different products on the market that you might find as a business owner. My name is Meredith Wood. I'm editor-in-chief at Fundera, and I spend a lot of time walking through business loans with business owners to help them understand the differences of what it could mean for their business. So I'm going to do the same with you today. And if you have any questions about anything in this video, feel free to leave comments as you're watching, because we're always happy to answer them and help clarify anything that we talk about during the video. So to jump right in, the thing to know about the business lending market is it's not what it was 10 years ago. There's now a ton of products that you can find online through online or alternative lenders. So we're going to talk about both those today and what it can mean for your business. So the first product I want to talk about is the one you're probably most familiar with, which is the bank loan or bank line of credit. They are by far the most affordable product on the market for small businesses. Now that being said, bank loans and lines of credit can be very hard to qualify for in terms of eligibility. They can also take quite a bit of time. If you're considering getting funding for your business and you need it in the next couple of weeks, a bank loan or line of credit might not be your best option. But if you have the time, it's definitely something for you to consider.
So what are the requirements for a bank loan? You're going to want to have a minimum credit score of 700, a minimum revenue requirement of $200,000 annually, and a time in business of over 2 years. So what do bank loans look like? The term is usually 5 to 10 years in range, the interest rates are less than 10%, and it takes about 1 month to get this loan.
So the process of applying for a bank loan is certainly not an easy one. There's going to be a lot of documents required. Every bank is going to ask for something different, but if you're approaching the process and you want to be prepared, here's what you should expect to have on hand.
What do you need to apply for a bank loan? Your resume for anyone who owns more than 20% of the business, a business plan, business tax returns, personal tax returns, your financial statements, your bank statements, an explanation of what you'll use the loan for, a debt schedule, a statement of collateral if you're going to use some, and you might be asked for some legal documents like articles of incorporation, licenses, or more.
Bank loans and lines of credit are great products for business owners. While they can be tough to qualify for and can take some time, if you're eligible for one, it's a product you should absolutely consider. The next product we want to talk about is an SBA loan. SBA loans are long-term loans that are partially guaranteed by their government. SBA loans are similar to a bank loan in that they're longer-term loans. They have really great interest rates that start in the single-digit range, and they're something that can be really affordable for business owners who are both eligible and, again, have the time to apply for this type of funding.
So what are the eligibility requirements for SBA loans? The minimum credit score is about a 640 plus. The minimum annual revenue is $150,000, and you'll need about a time in business over 2 years. So what do SBA loans look like? Well, the loan amount is usually $5,000 to $5 million in range. The term is about 10 years, and we're talking about SBA 7A loans right here. The interest rate right now in winter of 2019 is 8.25% and up, and you can get these loans in as fast as 3 weeks.
If you're watching this at a later date, those interest rates might be different because these rates are based on the market, as we all know fluctuates. So that's something you want to double check on the SBA site before you apply.
So what do you need to apply for an SBA loan? A driver's license, a voided business check, your bank statements, a balance sheet, your profit and loss statements, your business tax returns, personal tax returns, a business plan, a debt schedule, and a personal financial statement.
So the next product we want to talk about is a long-term loan offered through online lenders. These are loans that, again, should feel very familiar because they're a traditional term loan that you already know because of a mortgage or an auto loan, but they're offered through these alternative lenders, which make the whole process quite easier, and in some cases, the eligibility requirements can be a bit looser.
So what do you need to qualify for a long-term loan? You'll need a credit score of 650, minimum annual revenue of $120,000, and a time in business of over 3 years. What do long-term loans look like? The term is 1 to 5 years. The loan amount is usually $10,000 to $500,000. The interest rates are between 7 and 30%. And you can actually qualify for this loan in as little as 2 days. What do you need to apply for a long-term loan? A driver's license, a voided business check, bank statements, a balance sheet, your profit and loss statements, your business tax returns, and your personal tax returns.
The next product I want to talk about is a short-term line of credit. These are somewhat similar to short-term loans in the sense that you can get them just as quickly and with the similar eligibility requirements. When you need money very, very quickly, it will definitely put you in a position where you're not getting the most affordable financing for your business. But if you have a line of credit for your business, you have those emergency funds to go to if there is something last minute that you need. So if you're looking for traditional term loans right now, know that it's actually a smart thing to possibly get a line of credit alongside a term loan for your business.
So what are the requirements for a line of credit? They can definitely vary greatly by lender, but typically you'll want to have a minimum credit score of 550, a minimum annual revenue of $100,000, and a time in business of over 6 months. What do these lines of credit look like? The loan amount ranges from $500 to $1 million. The term can be 6 months to 2 years. The interest rate can be about 7 to 25%, and you can actually qualify for lines of credit on the same day you apply.
The one thing I want to talk about the interest rates here is you only pay interest on what you use for your line of credit. So that's something to consider as you're thinking about what this could cost your business.
What do you need to apply for a line of credit? Again, this varies greatly by lender, but typically you'll need a driver's license, a voided business check, bank statements, a balance sheet, your profit and loss statements, a business tax return, and a personal tax return. Now, there are some line of credit lenders that will ask for much less than this, so don't be shocked if you go to apply for a line of credit and you don't see all these documents on there. But we'd rather be more prepared than less prepared.
Now let's talk about invoice financing. Invoice financing is something that has been around for quite some time, but I would say in the past handful of years, it's sort of gotten a makeover. You have both invoice factoring and invoice financing, and the difference there is that with factoring, these people are buying your actual outstanding invoices from you, and then they're in charge of pursuing any outstanding debt on that. With invoice financing, the invoice more so acts as collateral for any financing you receive.
What do you need to qualify for invoice financing? A minimum credit score of 500, there's no minimum revenue requirement, and a time of business in 3+ months. You'll see the eligibility requirements are looser here because it's really more about your clients and their ability to pay back than your own. What does invoice financing look like as a loan product? Well, the maximum loan amount is usually up to 100% of an invoice's value. The term is until the customer pays the invoice, and the interest rates are really a flat fee up front, let's say 3%, and then a specified percent interest per week the invoice is outstanding. So if it's 1%, that means you pay 1% every week the invoice is outstanding until it's paid back. And you can qualify for invoice financing in as little as 1 day. What do you need to apply for invoice financing? A driver's license, voided business check, bank statements, outstanding invoices, your accounts receivable aging, and your accounts payable aging. There are some lenders that will require less than this if you're able to hook up your accounting software to their systems in order for them to find this information automatically.
All right, we're getting close to the end here, I promise. I have 3 products left, and they're definitely ones you're going to want to learn about, so stick with me. So the next one I want to talk about is equipment financing. As you'll see, we're sort of in this realm now where we're talking about things that can specifically collateralize funding for your business. So if you're looking for funding right now because you're trying to buy a piece of equipment, say a new oven for your restaurant, this is a type of funding for you to consider because the equipment you're looking to purchase will actually collateralize the loan, which, as you can imagine, makes it a bit easier to qualify for and helps with the pricing.
What do you need to be eligible for equipment financing? A minimum credit score of 630, a minimum annual revenue of $130,000, and a time in business of at least 2 years. What does equipment financing look like? The maximum loan amount is up to 100% of the equipment's value. The term is the expected life of the equipment. Interest rates range from 3 to 30%, and you can actually qualify for equipment financing in as little as 2 days. What do you need to apply for equipment financing? A driver's license, a voided business check, your bank statements, your business tax returns, and the quote for the equipment you're financing.
I want to talk to you about a merchant cash advance. Tread carefully here. These products are the most expensive product on the market. And if you are currently looking at it, I want to make sure I emphasize that you want to check all your other options before this is something you consider. So with a merchant cash advance, lenders actually purchase a portion of your daily credit card sales, and that's how the loan is paid back. And the good thing about this is that when cash flow is great, you'll pay back more, and when cash flow is slow, you'll pay back less. But obviously, you're essentially giving over a portion of your cash flow every day, which can be really tough for businesses.
What do you need to qualify for a merchant cash advance? A minimum credit score of 550, a minimum annual revenue of $100,000, and a time in business of at least 2 years. So what does a merchant cash advance look like? Well, the maximum cash advance amount is from $2,500 to $1 million. The term is pay daily via your merchant account, and the factor rate starts at 1.14 but can get much more expensive. And you can qualify for merchant cash advances in as little as 2 days. What do you need to apply for a merchant cash advance? A driver's license, a voided business check, bank statements, business tax returns, credit card processing statements, and I want to be clear, making sure you've also gotten offers from everywhere else before you apply for this product.
Like I said, this product can get very, very expensive, so you want to check the APRs on this so you understand how much it's going to cost your business. The last thing I want to talk to you about is a business credit card, and you're probably like, what? Why are we talking about business credit cards and we're talking about business loans? And it's because a lot of new business owners especially don't realize they can actually use a credit card to help finance your business. You spend so much as a business owner, and if you think about the cashback offers that some card providers offer or the travel rewards you can get, it's essentially money you're leaving on the table if you aren't using a great credit card. Of course, using a credit card requires a lot of discipline, and that's something that you absolutely need to adopt as a business owner because credit, both personal and business, is going to be instrumental for your business going forward, from getting financing to a trade line and all sorts of other things.
What are the requirements for a business credit card? Minimum credit score starts at 580, and the higher your credit score goes, the more options and better options you'll have. There's no minimum revenue requirement and no time in business requirement. What does a business credit card look like? Well, the credit limit will depend on your own credit worthiness. The term is month-to-month payments, which you probably know from your own consumer credit cards. And the interest rates will vary by the card, but the nice thing is you can be instantly approved for business credit cards. What do you need to apply for a business credit card? Your business name, your tax ID number, whether that be your social security number or your EIN, depending on the type of business you have. You'll need to give them your business entity information, your estimated monthly spend, your monthly revenue, and other business information depending on the provider.
Applying for a business credit card should be a pretty easy process, but of course, if you have any questions, providers are great about providing a lot of information up front so you know what you're getting yourself into. Whew, that was a long list, but this is what I'm telling you. The business loans market is so much more complicated and diverse than we find on the consumer side. And you've done yourself an awesome thing here by watching this video and being introduced to everything that is out there. Because what's most important is that you get into the right loan for your business. And right can mean a lot of different things. It could be most affordable, it could be quickest, it could be fastest payback period, it could be lowest monthly payments. The right thing for your business is ultimately up to you. So if you have any questions, visit Fundera.com right below, or you can leave questions or comments and we're happy to answer them for you. Just know we're here to help you through this process, but hopefully it all appears a little bit less intimidating after watching this. Thanks for sticking with me on this. I hope it was helpful and more to come in the future.